the S&P 500, the Nasdaq 100. Now, today we're going to be talking about expectations into this week because it's arguably the most important week that we've had in the past 2 or 3 months. We have this idea now that the market has bottomed. That is the going consensus out there. We've seen the recovery from the bottom, around a 26-27% recovery on the S&P. The Nasdaq has ripped up crazy, as we're going to look and see. But now I think we're at that tipping point. I posted this on Twitter and I gave people a little bit of a visual. And really quick, we're just going to jump over there and look at that, as you can see, and kind of follow along about the points that I'm looking at here, right? So when we look at where we're at and how we're moving, this is what we were talking about from Goldman Sachs. We covered this in a previous video. There's an expectation that GDP will grow now, and that we potentially have seen the peak on CPI and PPI. Now, the underlying bad news hovering over us is going to be what's happening potentially with another 0.25 hike. We've already seen the comments from multiple individuals that another 2.5 here is essentially meaningless based on how we're moving and what's going on in the economy. I think a pause is likely. I'm not betting on a pause, but I want to urge people to understand what could happen. Even if we get a hypothetical 0.25, we get a small dip, but understand what's actually happening here in the market and where we're at, because this week was very important when we look at the underlying movement that we've had. And before we jump into anything, let's just go over, the 3 bullet points for this week. A little less detailed, but we have FOMC, which is going to be Wednesday, CPI and PPI Tuesday and Wednesday, and then the expectation of GDP growth, because that GDP growth is the fine line, right? That's that part that we need to kind of focus on more, because we've had this expectation and we've seen GDP slow down and down and down. But what happens if it starts to bottom and starts to, go back to the upside? Are we prepared for that? Are we setting up that visual or the potential for that to happen? How will the market react if we start to expect more growth? Before we get into that content, I ask you to do 2 things. Consider liking and subscribing. Every single day we make videos for you, so you are prepared. If you get anything out of this, consider liking. It does help out a lot. If you don't like it, then of course, unsubscribe, unfollow, don't watch the video. That's all I can say. The newsletter was also sent out today. You can go look at previous editions if you are interested. You can look at last week's, the week before. We never delete anything. It's absolutely free. You're going to get all the levels that are entailed here for the S&P. You saw the breakout of 4,200. We mentioned it here. 100% free in the newsletter. We told you what to expect and how to expect it. We talked about semiconductors. We talked about the VIX, Amazon before it ripped. We talked about all these stocks, Apple going to all-time highs. All free for you. We're not advertising anything. It's just all there every single week, so you are prepared. It's a great free tool. Now, if you are interested in getting more active and surrounding yourself with like-minded individuals in the trading community, I think Discord could be a great area for you. I don't recommend joining Discord, though, if you're brand new to trading. It's not a signals Discord to where you're going to get signals, get rich, and then, never go back to your 9 to 5. I do believe we are setting up the foundations to get people to that area of successful trading, but I never want to advertise it as this get-rich-quick idea. I want to make sure that's understood. Now, really quickly, we're going to go over a few things here on the chart. I'm going to give you my opinion because I think it's all opinion-based going into this week with CPI, PPI, what's happening with energy, and the expectations. If we look at where we are specifically here on the Nasdaq, this week in particular, we came right down into demand. This was all mentioned here on Twitter as well. I like to post on Twitter because I want to be able to give you guys as much content as possible. Okay, we posted that demand here on Twitter. You can go even further back if you really want to. Go to media, right? So you can see all of the posts, all the comments. You saw the SPY bull flag, Tesla bull flag, all these playing out like perfectly. They were all here for you, so you were ready. You're on the market, right? You saw all this coming. It was all ready for you. So we saw the demand. We saw buyers immediately step in and push you back into highs very quickly. Now, in particular with ES, this is where things get more interesting. ES was making higher highs and higher lows for the entire week. You can clearly see the overall trend that was established there, clearly pushing to the upside. Now, not only was it pushing to the upside, but it hit our clear target, August highs of last year. Okay, almost to the tick. Great. Now, what about Dow? And I'm going somewhere with this. So we look at Dow, pretty solid week, pushing up, came down, pushed back up. You saw buyers hold you up, in particular with these candles. Sellers try, but they cannot. They fail once again. Now, the kicker here, and this is what we talked about last week, was the Russell. IWM. Absolutely gorgeous. You go to something like the daily chart and you can see we were range trading here. It's very clear. We were range trading there for basically a month and a half, 2 months. Okay. Over and over here on the IWM, right? Breaking back up. Now, not only are you breaking up here, okay, but let's identify where we're at here. So we start to look at the 200 MA on the weekly, right? Look at that. You're mounting above it. This was the goal here. We push, come down, mount. That's where you want to be. As long as we're above that 200 SMA, I believe we're in a risk-on environment. As healthy as we could be. Exactly what we want to see. Again, my opinion, right? Now, I want to be very clear that before we jump into anything else or we start, giving targets or expectations. I continue to say over the past few months that when you're trading, specifically day trading and scalping, you got to get in, you got to get out. You cannot be too gritty with holding these swings. If you have dated positions, like for instance, Amazon, it was one of our favorites, QQQ. Those are names we were like Google, right? Well, we play those on the longer term. Like I got an in the money call for 2025 on Amazon. The thing printed. It was fantastic. It was posted in Discord, posted here. QCOM, we bought stock at lows. Those are positions that enable us to have the ability to hold longer times. Now, when I'm trading, a 2-week out contract, obviously there's a lot more attached risk. And we've seen the back and forth action here on the market, especially this week with the rotation that we saw. We can look at sectors, and I have to continue to say this. XLV, what a recovery over the past few days. What a recovery. Buyers showing up once again. XLE, energy names, bouncing on the week. And I'm going to go into energy as well, so stay with me. XLI. We saw XLI, specifically something like Caterpillar, getting destroyed for weeks on end, right? And now look at Caterpillar going crazy with industrials, breaking out, pushing back up. Well, what about Boeing? Big name here. Again, Boeing was top of the watch list this week. You're mounting that 200 weekly moving average. Now, look how far back this goes. This goes back all the way to 2020. So you're seeing money flow back into the market and not just into tech anymore. Everyone was so bearish and like, well, money's only going into tech. But what were we saying the entire time? What happens when the rotation begins? What happens when this is confirmed? And I think that's where we're at. And that's why I believe this week is such a big, it's a major tipping point. I can only say that because if this week goes accordingly, if it goes right, you have a lot of upside potential across the board. If it goes bad, I think you have some downside, but I don't think the downside will compare to the upside potential. Because even if we have downside, I think it will be short-lived. I don't think it will last that long. Now, it's not to say to bet and go all in. I believe you're going to have opportunities like last week. I said it all week. Opportunity. If you were all here on the channel and you had so many trades you could enter. Netflix, Microsoft, Apple went to all-time highs. So we can go NVIDIA, AMD. The list goes on and on and on, right? So I just want to make that clear. You're going to have potential. You're not just going to break out and go straight up. Just like when we broke out here, you retested, broke back, retested. So you had opportunities. So understand that as well. Don't just be rushing and jumping and do anything like that. Now, again, I don't want to spend in a crazy amount of time on the video today. If you want to see this information, it's on investing.com. I am not sponsored by them. It's just a free source, and I love their calendar. So you just go to news, go to economic calendar. I don't know why it took so long to load. You go to this week or whatever day you're looking at. You can sort it as well. It's easier on your phone to sort everything. But I do want to just address, these specific dates. Okay. So CPI, Tuesday, 8:30 Eastern. Okay. A little bit lower. Wednesday, right? What's happening Wednesday, 8:30. PPI coming out as well. in the FOMC meeting. So I want to make that really clear about what's happening and where we're at. Now let's go over the 3 main bullets for the week. FOMC. Now I think FOMC personally, the bad side of FOMC, PCE did not go that good last time. But the good side of FOMC, we saw unemployment rise. We're from 3.3 to 3.7, which is as high as it's been in about 6 months. That's a good note there. Non-farm payroll was interesting, but I think the unemployment data is what they're going to focus on. Now, again, why do I think they're going to focus on the unemployment data? Because the Fed has a tendency to focus on the good things. They like to highlight the good things in the market. They've been doing this for the past year. Anytime we saw one area do well, that's what they focused on. Even when inflation was dropping and it was all based on energy, they still pushed that inflation was dropping, and they didn't really mention energy. I'm just saying, Fed has a history of doing the same thing over and over. Now, again, it's my opinion. I do think it'll be interesting about the pause. We've seen some of the most bearish and hawkish members of the Fed hint towards a pause being okay. Kashkari, I don't believe Bullard, but a few others as well. A lot of the other names. Some of the big hawks have stayed hawks, but it is what it is. Number 2, CPI and PPI. Usually, I would expect CPI and PPI to follow PCE. But if we really quickly look over at what's happening here on VIX or on U.S. oil crude, in my opinion, looks terrible. It's one of the worst looking charts as we speak. You know, going back to 2020, 2021, biggest bull ever on crude. I loved it. Fantastic. Great. Was my favorite. But now you can clearly see you are in a downtrend. We can highlight that, make that white real quick. 1 sec. So you can see clearly on the downtrend pushing, and you are just grinding above the 200 SMA here on the barrel. If you lose the 200 SMA on the barrel, it's not great. Okay. I'm going to tell you that now. Downside opportunity, $57, maybe around lower 60, give or take. What's the going trend that we've seen while crude's been dropping since July? Inflation started taking a turn for the better. So as long as energy prices drop, I think inflation will get more and more tamed and look better on paper. I'm just saying. Now, some of you are saying, well, the only data that's affecting it is based on energy. Again, I'm just saying how the Fed interprets this information. Do I believe inflation's gone? No. Do I believe this is a justified bull market based on fundamentals and the health of the economy? Not necessarily, I don't. But I am not going to go against the trend. I'm not going to go long on oil, long on energy while you're still moving down. Makes no sense. You start to break up, then yes, I would like it. But again, while the Nasdaq continues to push up, I'm not going to be the one guy going short. All those people, where are they now, right? I'm just saying we have to try to maintain a level of transparency here, and I'm just trying to give you a visual of what I'm doing and why I'm doing it. Again, VIX. VIX is very interesting where it's at this, going into FOMC. I will say this. Everyone thinks VIX, just because you're low, you have to, you have to pop up, you have to bounce. I believe VIX is a decent hedge if you want to hedge your account. But I'm going to tell you this now. As much as I like VIX, I do. I really like it. Okay, I think it's an excellent hedge if you're leveraged to the upside on equities. I think VIX could be a great hedge for you. But what have we been saying? Everyone's been saying VIX is going to pop. But the thing about VIX being at these levels, these are lower levels in 2021. These are going to 2019 now. What was happening during this time? The market was just making new highs and new highs and new highs. It was bullish. Now, why are we disconnecting that here? Again, this is just technicals, so we have to, take these to the side when identifying what's going to happen with CPI and PPI. But again, that's my visual on those two. And then the last one, and this is, the big expectation here, GDP growth. If we start to see the expectation of growth on the economy, as small as it could be, I think that is a great sign for the upside. Again, I'm not biased here. I'm giving my opinion. I have no skin in the game right now. I'm sitting on the sidelines just waiting day by day as we go through this. But I'm going to tell you, the idea of growth in the economy will stimulate it exponentially. It will be extremely good for the market going forward. We need to identify and understand that as well. So as bearish as you could be, as bullish as you could be, you need to be focusing on these three things over the week. If the FOMC meeting goes bad and they start, sounding like hawks and they say inflation's out of control and this is bad and this is bad, then yeah, obviously I'll slow down on my bull thesis and start paying closer attention to potentially making a lower low. If CPI comes out higher than expected, then of course I'm going to slow down and pay attention to the potential of a reversal. If GDP growth comes out lower than expected, the same thing, right? We have to react to what the market gives us. We need to stop trying to predict, stop trying to guess, stop trying to get rich quick, and start focusing on what the market's giving us, reacting to what it's doing and how the market's reacting to what the Fed and what things are happening and what data points are coming out, because that's how you make money in this market. That's how we've been making money over the past 2-3 months here and really catching the bulk of this uptrend, is because we're just watching what the market's doing and reacting to that information. That's how you win in this game, and that's how you stay alive most of all.